All right. Today we're going to look at Realtor.com's 2024 housing expectations for the U.S. housing market. And we're going to talk about how we think they compare to what's actually going to happen here in the Portland metro area locally, because remember, real estate is local. It's neighborhood centric. My name is David Caldwell. I'm here with Katie Henderson. We are real estate brokers at Hillshire Realty Group with eXp Realty. So should we get into it, Katie?
Let's get into it.
Okay, so the first thing we're going to talk about is housing inventory. Housing inventory meaning, excuse me, the number of homes coming to the market, the number of homes being actively listed for sale. And what they're expecting is less housing inventory in 2024, which is actually directly opposite of my opinion. We'll see what Katie's opinion is here in a second. They're expecting the national housing market for inventory to drop 14%. Now, we don't know where new listings are going to end up this year in Portland. What we know is through October, new listings are down 19%. Now, one thing we did see with new listings coming to the market in Portland this year is when we got to about the middle of summer, we were actually in alignment with 2022. So we started out really low. New listings built during the summer season as people were getting comfortable with these higher interest rates and still having a need to sell. And we've actually seen more inventory actively, I hate saying it, sit on the market, being listed for sale as days on market extends. So my expectation is that we're probably going to have somewhere around 3 to 4 months of housing inventory in the Portland metro area this next year. What does that mean? No new homes come to the market. It takes 3 to 4 months to sell everything. Where are we at right now? 2.9 months. I'm expecting that we'll probably see somewhere around 35,000 homes listed for sale this next year. We're probably going to have something like 31,000 homes come to the market this year. So what percentage increase would that be? A little bit over a 10% increase. So I'm kind of like directly the opposite of Realtor.com. What are your thoughts, Katie?
Well, I think as buyers and sellers in this market, we can kind of cultivate our own experience. The more knowledge we acquire about the market, I mean, like if you ask the average agent, how many months of inventory do we have in the Portland metro market? You'd probably get crickets. But as you mentioned, it's about 2.9. So I think when we go to a seller and we say, hey, there's about 2.9 months of inventory or whatever it is, you'd want to cater it to their kind of hyper local market and just say, what kind of experience do you want to cultivate when we put your house on the market? And that starts with pricing. A lot of people say, well, let's shoot high because my neighbor sold their house for this a couple of years back and mine's better. And we'll just wait it out. And you're cultivating an experience pricing that way. Or maybe you want to be a little bit more competitive or move the needle a little bit toward the new normal. And you're going to create that kind of like what did you talk about it? You called it something before when you said those people are the ones that are recreating comps for the neighborhood.
Dictating the market. Yeah, there's two types of sellers in the market. There are sellers that are holding on to yesterday's values or protecting their equity, right, or equity they perceive they have. And then there are homeowners that are basically coming to grips with what the market is, right? And they're pricing more aggressively, which this market requires, or they're getting their home in better condition prior to listing, with which this market requires. And they're the ones that are dictating the new comps. And we all know appraisers go out to look at properties and evaluate them based on comps. And we have a really savvy buyer in the marketplace today that's also looking at comps in your neighborhood on websites that show closed sales. So, the home buyer in the market, they understand the inventory and they understand the comps, but it is the more aggressive sellers. About 70% of the market, I think, this year will successfully sell, which is one of the lowest numbers we've had for a while. What's that mean? 30% of people, I don't want to say they all priced over market, but 30% of people priced over market.
Mm-hmm. And what if you had a seller come to you and they said, hey, David, we really want to price here and we're going to wait to see what happens. We're just going to roll the dice. And, if somebody likes our house, they'll come see it anyway, and we'll just negotiate from there. What would your response be in that scenario today?
Well, the first thing I would look at is how much inventory is in that price point, right? If you're in a marketplace where there's two homes on the market for every buyer, maybe you're a lower priced home in today's market. I might be okay with something like that to test and feel the market. If you're in a marketplace where there's like some that we've seen right now, there's 8 homes on the market for every buyer buying on a monthly basis. That's a really bad strategy. What you hear a lot, I'll rephrase the question, I'll be a politician, but David, we don't have to sell. Buyers don't have to buy. That is a very weak place to negotiate from when there's a lot more sellers in the market than there are buyers. And where that could damage you is days on market are a black eye for everybody. Even though we're in a marketplace where days on market are extending, the consumer still looks at days on market and they ask, what's wrong? This home's been on the market. What's wrong? This home's been on the market for 2 months. What's wrong? This home's been on the market for 6 weeks. What's wrong? You know, the home buyers are still conditioned for the best property to sell quickly. And when you don't sell quickly, the question is, what's wrong? And I think that's where a seller puts themselves in danger a little bit. I don't think you have to have low days on market to have success in selling a home. I've never believed that. But I do think that this is where strategy is important.
Yeah, I would agree.
So let's look at mortgage rates. Realtor.com believes the average mortgage rate next year is going to be 6.8%. Goldman Sachs, I'm going to give a counter. Their previous outlook actually was 6.8%. Their new forecast is 7.1%. Today, what's happening in the mortgage market, right? Mortgage rates are declining right now. We've had 8 weeks or 6 weeks of declining, 4 weeks of decline. I can't quite remember, but we've had good momentum in one way. But the mortgage market, it kind of moves like the stock market. It doesn't just go down. It doesn't just go up. It goes up and down. So the question is, are we in the beginning of seeing rates decline down to the sixes and stay there? Are we at 7.1% today? And all of a sudden we're going to bump back up to 7.5. The reality is we don't know. But what we are expecting for 2024 is a higher interest rate environment, in my opinion. What are your thoughts?
Yeah, in general, I feel like, and let me know what you think. I feel like a lot of people in our position are very quick to celebrate a decrease in rates. They see green when they open up that Mortgage News Daily app and they're ready to post and tell people it's time to buy. And it's like, wait, you know what? 7% is still high. Like it's tough with housing prices where they are. Like we really need to look at affordability and monthly payments and how much of a monthly mortgage payment are our buyers willing to bite off right now. So I think we should just not be too quick to celebrate these wins. And let's just kind of sit back and watch and kind of develop a strategy. I will say this is not a bad time to start connecting with a lender and a realtor and just start cultivating that relationship and having those conversations like, hey, I'm noticing some rate relief right now. I may have plans of purchasing a home in the next 12 months. What can you tell me about what I should expect or what can I be doing to prepare now? It doesn't mean you're pulling the trigger. It just means you're informing yourself and becoming an educated consumer.
Yeah. I think the good news about 7.11% interest rates where we are today is that you can get a rate at 5.1. I mean, the buy down opportunity that these rates are creating, I think, can be something to celebrate because there's a big difference between 5.1 and 7.1. There's a difference between 7.1 and 8, but it's not astronomical. I just looked, a $600,000 home at 7.1%, assuming you put 20% down and you have $6,000 a year for taxes and $1,000 a year for homeowners insurance, your payment's $3,800. At 8%, it's $4,100. At 5%, it's $3,200. Now, I was thinking about that in terms of like when people come to me and say what they want their mortgage payment to be. For most of my career, it was 2,000. And then the last several years, it's been more of a 2,500 to 3,000 was the sweet spot for the kind of the average person in the market that we helped. And obviously there were people that were buying homes at $4,000 a month, $5,000 a month, $6,000 a month. There's just fewer of them. And maybe this is a good lead in to look at home prices, because one thing that's happening with these home pricing forecasts that's very different from 2023 to 2024 is that the national housing forecast from realtor.com is a 1.7% decline in home values. Now, if you've been watching any of our content, I feel like we've been ahead in the Portland market talking about the decline in home values in the metro area. My personal belief is that we will, if interest rates stay above 6.5%, is we will see home values decline in that 5% range this year. Maybe as high as 10 if interest rates stay in the sevens. But if we can get into the mid sixes, I do think buyers are still going to be negotiating closing costs 1, 2, 3% off the back end of the sales price, and that there's going to be enough inventory that they're also going to be able to, wait for a home to do a price reduction, or sellers are going to have to be more serious about doing larger price reductions in the 2 to 3% range versus just the 1 or 2% range, which is what we've commonly seen this year. People really want to have success.
Yeah, I think when you are a seller, you're getting ready to list your home, talk to your agent and say, hey, do you have a lender who can let me know what a buyer with 20% down and a conventional mortgage is going to be paying for my house monthly today? Because it might look vastly different from your current monthly payment. So just put yourself in a buyer's shoes, and that may help kind of quell some of those concerns that you have when you don't have showings lined up back to back on the first weekend. That may be the case. So I think that's really important. I still have a relationship with this lender, but when I would host open houses, their team would put together a personal flyer for me, and it was like loan scenarios. If you had this down on this specific property with these property taxes, you could come up with scenario A, B, or C and call us for more kind of thing. And those were fun to hand out. I had some listing agents who said, don't put those out for my listing. But I like them. I think an informed buyer is a stronger buyer. So I thought that kind of thing was kind of cool. And if that material is not available for you readily, contact an agent or a lender who can put that stuff together for you. It's so important as a buyer or a seller, I think.
Yeah, agreed. And don't contact just contact us. That's what I'm always going to say now. If you're like, contact the lender, contact us. Yeah, contact us. Information's in the bio. So let's do a quick recap, right? So Realtor.com believes housing inventory in America is going to decline 14%. We are on the opposite perspective. In the Portland metro area, we believe housing inventory will increase. They believe a high percentage of the sellers in 2023 that did not have success will attempt to be sellers in 2024. Mm-hmm. Mortgage rates. They believe mortgage rates are going to be 6.8%. We're in agreement with that, correct? We also believe we're going to most likely see a higher interest rate environment. Home prices. They're anticipating a national decline of 1.7%. And we believe that'll occur. We just believe that'll be a little bit heavier in the Portland metro area. Now, let's talk with just one thing about predictions. They're almost impossible, right? Yeah. No one would have guessed we would have a pandemic and interest rates in the twos, right?
If we wouldn't be doing this job. I'd be doing something else if I could have predicted.
I'd live on a beach. I'd be really sunburnt. It'd be awesome. But predictions are tough. And you guys, predictions are going to change based on interest rates. If all of a sudden we have interest rates in the fives, prepare to stand in line again. Prepare for a high percentage of homes to be selling really quickly. If interest rates go to 8, if they stayed at 8 and for a sustainable period of time, look for heavier depreciation. So many things in real estate are based on affordability, and we have a 40-year low and affordability in the housing market today, which has created a significant challenge for buyers and a significant opportunity for buyers. And really for sellers, it's just created challenges. So if you have questions about the 2024 housing market, you're thinking about buying or selling, should I buy? Should I wait? Should I sell my house? Should I rent it? Let's have a conversation. Let us break down what's actually happening in your market and not just talk from a feelings perspective, because a lot of people feel the market is doing something. And my time as a real estate coach taught me I don't care about people's feelings. I care about the data. I care about an experience that potentially I can duplicate. That's actually, when you know those things, that's how you beat the market. That's how you prepare for success. Feelings are kind of irrelevant in this equation. Is there anything
I
that
care about your feelings and the data. So
Well, I care about my clients' feelings.
if you need a little like real estate therapy on the side, call me, not him.
Hey, and if you guys want to see more content like this, if this was helpful to you, if you have a friend, maybe that would benefit, make sure you share this, like, subscribe, and we'll see you next time.
Bye.